Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, National Underwriter for Old Capital, Paul Peebles, and with me today, well, again, not with me today, Michael Becker. Michael is on a cruise ship with his family and could not make our podcast today. But in the podcast, we have a couple entrepreneurs and entrepreneurs to the ninth level, and I think that you'll really enjoy talking and meeting and spending some time with the Yues in the podcast. He's an engineer. She's kind of an entrepreneur herself. She kind of keeps an eye not only on the kiddos, but also keeps an eye on their properties. And so in the podcast today, let's say hello to Ken and Wind Yue. Hello, guys. How are you?
Hello.
Hi, Paul. Good morning.
Good morning. So I thought we'd kind of visit a little bit with the Yues about how they made the transition from single family into multifamily ownership. And that's kind of a route that a lot of people take, is that they have, kind of like the game Monopoly, they have a number of single family homes and they want to convert those homes into hotels or / apartment buildings. And that's kind of been what the Yues have done. So Wynn, give me kind of an idea, a little bit about your background, a little bit about Ken's background, and kind of let's kind of talk a little bit about how you got into this multifamily business.
Yeah, we love real estate, and we start since 2009.
Okay.
Yeah.
And so, Ken, tell me a little bit about your background.
My background is mainly technology. I'm an engineer for 20, 30 years. I'm an immigrant, so when I first came to this country, I did not speak the language. So math was what I good at. So that's why I ended up a major in engineering. And so I got a bachelor's degree from Clemson and a master's degree from Georgia Tech. After I graduate, I moved out here to Texas and work for a local defense company. Been with them for a long time. But real estate is always something I like. Always own one or two rental property here and there. But it wasn't until 2009 where I showed my wife at a local investment club the potential of it. And once my wife saw it,
once she was on board.
She was on board. I thought I had to convince her, but she didn't need any convincing. She said, let's join like yesterday. So you talk about entrepreneur, but my wife really is the driving force, in that sense.
She is. I mean, that's why I wanted to make sure that she was here today, because she is the blood of the Yue family.
Yes.
I get it.
Because I've been like an engineer for like 20, 30 years. Mm-hmm. So I have a somewhat of an employee mentality. But my wife, she's actually, when she was in Hong Kong, she was actually a director of sales for like 100 people, 100 agents. Mm. So her business background is a lot stronger than mine, actually. So when he saw this, she knows the number that works. And right away, she's like making offer like crazy. So that's when she's come, when she did her things. I mean, at some point, when I look at my bank account, I only have like $300 left. So I asked Wynn, should we be making like all these offers? And she said, yes, because this is the end of the month. We're going to have like $200K coming in, from rent. So no problem. So as usual, she was right.
Absolutely.
We kept on and we kept accumulating, single family houses. And from 2009 to like 2013, we bought and sold about over 70 houses.
Yeah.
70 houses, Wynn.
Yeah.
And how did you find these houses? Did you have to go out and search for them, or did you have a group that was looking for these properties for you?
I just through the internet.
MLS.
Yeah. MLS. Yeah.
MLS?
Yeah.
Every day she does 2 or 3 hours on the MLS every day.
So she's the Sherlock Holmes.
Yes,
going
she looks for deals.
Looking for the deals out there.
She'll make offers without looking at the houses.
So from 2009 to, let's say, 2012, 13, you guys were mostly just single family owner operators of properties. And then you built up a portfolio of 70.
Yes, 70.
70 homes. And so that's That's absolutely amazing. And you were able to keep your full-time job?
Yes, because Win was helping me, so I was able to keep my full-time job and helping here and there, like calling plumber, AC people, things like that. Yeah.
And so what made you make a decision to get over to the multifamily side? Was it just economies of scale, or was it just the time to do it?
It is the economy of scale. When we saw the potential of single-family houses, we liked it a lot. Mm-hmm. And when we saw the potential on multifamily, we like it even better. But we were just not ready financially in terms of net worth. We don't think that we can start with multifamily. It could be incorrect, looking back at it. But we thought we can build a lot of sweat equity in single family. So that's how we started our investing career. When we get to 2013, market for the single families kind of changed. We did 70 single family houses from 2009, 2013. We looked at it honestly. We don't think we can do another 70. The market has changed. Prices a lot higher. We were buying $40 per square feet versus now $60, $70, $80 or even higher now. Mm-hmm. So we always planned that, to switch gear and start working on multifamily, looking for multifamily deal.
Did your family ever think that you would own 70 single family homes? I mean, is that something from where you come from that people would own 70 single family homes?
Yeah, I mean, it's pretty shocking. I mean, obviously, we bought and sold some of those. But yeah, that number even amazes us. I mean, now we're looking back at it, how do we do that? But it's basically just kind of put our heads down and just kind of go on through our business, do our daily thing. Like for Win to look for property in the MOS, mm-hmm. and for me to go, buy them, go borrow the money. And, for us to engage our contractor to go fix it and then lease it out. And then if the property... the number's right, we will sell it to another investor, so they can rip the reward, and then we kind of capture some of the capital gain.
So great. So you made the transition to multifamily. Now, how did you get into the multifamily? Did you start off as the managing member? Were you a passive in somebody else's transaction? Did you put money into somebody else's transaction? Tell me a little bit about how you did your first step.
Okay, we did actually start as a passive when we did our single family. When we're really busy with single family, we didn't have time. We didn't have time to go sponsor our own multifamily deal. So we participated in one deal in Dallas. It's 204 unit. We were passive in that. Mm-hmm. So
since 2009,
right.
We sold 2000,
and then that property was sold like 2013.
Yeah.
So we have some basic experience in being a passive, but we always thought, when the time is right, we're gonna do our own deals. Mm-hmm. And by 2013, we think we're ready. So we decided to go join another investment group that specialized in multifamily, and start looking for a deal that fit us.
So we talked about being a passive investor. We kind of think of it as like an airplane. The passive investor is similar to like the passengers in the back of the airplane. Maybe in coach, they pay to get onto the airplane or pay to buy an apartment building, but they have limited use. They're not material owners of the property. They're just limited partners in the deal. And that what you're telling me is that you want to move from being a passenger on the airplane to being actually either the first officer or the captain, the one that was actually the managing member that did everything. Was the one that was responsible to make sure the property was performing optimally. And, you took out the loan with you in the group that you put together. So you moved from, say, the back of the airplane to the front of the airplane and kind of gave the direction of where the whole airplane or the building was going to go to. So you were a passive investor first. And then in 2013, you guys had an opportunity to buy an apartment building, and you, as the managing member, you made the decision what you wanted to buy, and you put the team together. So tell us a little bit about that property.
Yeah. We made the decision in 2013, but it wasn't until 2014 that we can actually find something that kind of fit us. Since we're still kind of new on the multifamily, so we're looking for something that is more stabilized property and that have some upside to it. So we spent almost 6 or 7 months looking at it, but we finally find one. And the first deal we have is already a Fannie Mae deal. We're lucky that we have friends who already have Fannie Mae experience. So I engaged him to team up with us. So we can get a Fannie Mae loan for this property.
Yeah, let's talk a little bit about that, exactly what that means. And so when you buy a multifamily property, typically your first transaction in multifamily is going to be a regional bank loan. It could probably be a recourse transaction. And that was something that Ken did not want to have. He wanted to get a permanent loan. He wanted to get a non-recourse loan. He wanted to get a longer amortization, like a 30-year amortization, maybe a 10 or 12-year term with a low rate. So he didn't do a regional bank loan. He did a Fannie Mae loan right out of his first transaction. And how he did it is that he brought on some other guarantors or key principals, we call it key principals, that had multifamily experience of similar sized properties. So he talked with them and they signed with him. So it's kind of like the country club, as my analogy would be, is that sometimes it's difficult to get into the Fannie Mae country club by yourself without having experience. But if you can get sponsored by some people that have multifamily experience and maybe the same submarket or the same size of property, it becomes a little bit easier for you that doesn't have experience to try to get a Fannie Mae loan. And you were successful at that, right?
Yes.
And tell us how many units was that building?
It was 105.
And that's a stabilized property you bought, but you also did some upgrades and updating to the property too. Even after the property was a stabilized property, but you wanted to bring rents to the next level. And
Yes.
some of the things that you did is that you put new windows on the property, and you did some more
New
interiors.
windows. Most of the interiors kind of already upgraded. So what we ended up doing is we put some fence, on the first floor unit. So giving them private patio. And there was a small space close by the laundry area that we can use as an office. So we moved the office, opened up 3-bedroom, 2-bath kind of unit as a additional rental unit. What else? We replaced the roof, and we also added some light to make the property more safe and secure at night. Tenant loved it. So yeah, those are the things that we did.
Fence on the back. Fence.
Yeah, fences in the back.
Yeah.
That's great. Now, when you guys bought the property, it was getting X amount per square foot in rents. How much have you pushed up the rents on this deal?
Steadily, I think we are adding like $20 to $30 on each because we're already kind of stabilized property. So we did not do any interior upgrade. So it's a little on the conservative side, on the $20 to $30.
Okay, not bad, but that's giving your investors a good rate of return,
Right.
And the property stabilized. Your bank, your lender, Fannie Mae, loves you, so they want to do more business with you. And so, what are some of the things that getting into your first multifamily transaction? What are some of the things that you learned that you can kind of share with people? Would you think that was a good way of getting things done?
Yes, I think getting your teams together is really important. For example, talking to you and the loan officer, at that time really kind of hand carry me through the process, because at that time I don't even really know what's a acquiring budget is.
Yeah, what a budget would be.
Right. Yeah. Now this is just normal. It's just
Now it's coming to you second nature.
Yes,
So
right.
you know how to put together
right,
a
and all kinds of
transaction.
paper to sign, lots of things you just have to mind throw, like getting the utility change and all that stuff. Is just a lot. The first time you really need to rely on your team, your management company, your loan person.
Well, how do you manage this property? When do you manage the property?
No, we do not. We have a management company that manages the property.
And was it difficult to try to find a good management company? Have you stayed with the first one that you chose, or have you replaced them? Or
So far, we have stayed with the management company we choose for that first property. I think they did a good job so far, but it's like any management company. I'm learning how to be a good owner, and basically, my feeling on this is the management company is going to have like 5,000 units to manage, and you have 100 of that units. So obviously, you have like a lot on their plate.
Sure.
So it's my job as an owner to kind of be the squeaky wheel. So we can get the degree. So I visit the property every week. I talk to the manager, make sure she get what she needed to get the property to perform.
Yep.
So that's my take on a management company. Most of the time they'll do a good job, but again,
you just have to stay on top of people.
Yeah, they have to stay on top of them. So
and so it's 105 doors?
105.
105 doors. And how many people on the property that work for the management company? Is it one person in the office and one person in
Yes, we have one
maintain the property?
on-site manager and one maintenance person. And sometimes when they do get busy, we do have additional help from the management company. You know, if we have more make ready to do or more work that need to be done around the property. So.
And so the property has been a stabilized property pretty much since the day you got it. You were able to increase rents. And then you kind of liked it. I mean, have you bought any more single families from that period of time, or are you just kind of now focused on multifamilies?
2014, we probably still bought a couple, right, Danny?
Little.
Yeah.
Just
Right.
2 and
So
3.
at that time, one thing about single family is that you have full control. But the bad thing is you have full control. So we kind of enjoy having a management company to manage our apartment over in Monterey. So slowly we're kind of selling off our single family now. We take all that equity that we build up and we're going to be moving them to straightly multifamily from now on.
Yeah,
So
because you still have your full-time job.
actually, I quit in July already.
Oh my
So-
gosh. So you've kind of made a displacement from having single family to multifamily with a full-time job. Now that you are just going into multifamily, it's not so critical on my part to underwrite the deal because 2/3 of my lending decision is really based on the property and really 1/3 is based on you. And the 1/3 based on you is really based on really two things: your equity, your net worth that you have, and the second thing is liquidity. So if you have a good net worth and good liquidity, that makes up for a lot of personal income that I don't really need to take a look at. So it's not necessarily that you have to have a job to multifamily, but you have to have a job for single family to
Yes.
qualify because there's specific rules when it comes to that. So you have this 105, you made another acquisition back at beginning of this year or so?
Yeah, in the middle of this year. So we closed my first property the end of 2014, and we liked it, and we kind of already looking for the next one to buy. Well,
Wow.
that was our plan
Yeah.
to transition pretty much all equity from single family into multifamily. So we know we're going to buy more. So we started looking, for the next one to buy. We were lucky that we were able to close on another one at end of August.
Yeah.
It's 188 unit in Irving, Texas.
So let's go. Single family, 105 units, your first transaction for the multifamily. The second was how many doors?
188.
188 was the second one.
Yes.
And before we skip too far, you guys are under contract for how much for the third one?
Yes. We are planning to close on another one, 160 unit in Fort Worth, Arlington area within the month. Yeah.
Wow. So you really, the momentum is just huge behind you. Now, to raise money, does it become easier that when you have a track record and something to show people that want to possibly invest with you, is it easier when you're starting to have some success out there?
Yes. It makes definitely a whole lot of difference. We're kind of lucky that when we did our single family, we kind of already have a lot of connection with a lot of investors.
Sure.
So a lot of those investors decided to kind of follow us and invest in the multifamily with us also. So in our first deal, we raised $1.225 million. It only took us a month to do it, really. We didn't really have too much difficult. On our second deal, we have to raise $2.5 million.
Wow.
And we did that in like a week.
Yeah.
We did it in a week.
So success breeds success.
Yes, definitely.
Wow. In this one, how much money do you have to raise in this one?
We probably have to raise about 2.5 again. And right as of now, I think like 80% of them is there. So we just kind of have to save room for some people that we want a relationship with. So other than that, I think we're going to be closing easily.
Wow. And then, so is it a network that you call upon? Is it friends? Is it family? Is it everybody when you first get started?
It is a
tell me a little
network.
bit about how do you raise money?
It is a network. Again, I have to give all the credit to my wife, Wind. She's a really personable person, and she makes friends really easy.
Yeah.
So she already built up a network of investors through our single family, and out of that network, it's kind of grew bigger and bigger as we go along. So we actually have more money than we can use right now. We have to turn people away, actually.
Isn't that amazing? I mean,
Yeah.
Did you ever think that you could, with a couple phone calls, raise $2.5–3 million of equity to buy a property? you've got to be blown away. But, Ken and I are not blown away because you have a high believability factor. So a lot of people believe what you say, and Ken is an operator, being an engineer, having understanding of mathematics, which is kind of the universal language, and setting together, programs on how this stuff is going to work. People are attracted to successful people, and they can want to invest their money with folks like you, I guess. So you've gone from 105 to 188 now to 160.
Yes.
But you've made a kind of a jump up to, say, Class B property.
Yes. This next one is 1985 built.
Yeah.
In really good condition, and I think all we really need to do is just make it a solid. Add some amenities in it, make it a solid B, and then we're going to be really successful in this one also.
What are some of the things that you learned on the multifamily side? We talked about a little bit about putting your team together and working with qualified people. But what have you learned about tenants, and what have you learned about putting together stuff? Tell me a little bit about what you guys have learned. And would you recommend other people to get into multifamily?
Yes, I think it's less hands-on, and you can rely on your management company to be an expert on their field.
Yeah.
In single family, we kind of have to wing at it. We kind of, because I have a full-time job, and my wife is really not a property manager, but she's acting like one. And so along the way, we have to figure things out, and we have to deal with tenant directly. Whereas in multifamily, you have a professional, manager at the site, and you have a professional management company that have tens and thousands of unit of experience to deal with all these tenant problems. So we're going to rely on them heavily. For us, we like to listen to the people that we find the right people to listen to. When it comes to finding financing, I come to you, Paul.
Thank you.
Right? And
Absolutely.
when I want to manage, the property, I listen to my management company. So the only thing we would like to do is to find a next deal and to put deal together and bring value to our investors.
Yeah. So you have a management company that's in place, and that you are the asset manager of the property. So you're the overseer. Not only do you oversee the management company, but you also are out on the hunt to find other properties for your investors to invest in with you.
Right.
And, this is a very and super competitive market here in the Dallas-Fort Worth area right now in the fourth quarter of 2015. Tell me a little bit about, trying to capture the transaction from the seller. How difficult has it been for you in the past? And what do you think gives you how come let's just take specifically. Why were you awarded this last transaction? Was it the best price, do you think? You guys went hard on money. Tell me a little bit about that.
Right. Yes, the market is very hot, and cap rates keep going down. We're just lucky that for this one, the broker actually that I worked with on my first deal, so he kind of liked working with me already, I think.
Yeah, that broker who does a lot of business in the Dallas-Fort Worth area sold Ken and Wind their first transaction, and I think that he enjoyed those guys because they closed on time. They weren't really aggressive on trying to retrade them in the deal, and felt that the next transaction that they were able to do, they, I think, went to the head of the class with that group.
Yeah, we were lucky in that respect. And he told me that we are not highest offering price, but because we were prepared with Paul's help, I was able to bring a term sheet in along with my offer that show him that I did my homework, that we can close, that we can perform. And because of that, we were selected. Obviously, he pushed me, to put some non-refundable on his money, stuff like that. And in this market, you're going to have to do it. So we decided to go here. But basically, it's because we were prepared in our offering, with your help, with the term sheet, with the management company's plan on how to really quickly do the due diligence, and our previous experience with the broker. That's what got us to deal.
Yeah. What do you think the difference has been having your husband at home most of the day from his old job?
We always enjoy stay each other.
Yeah.
We never argue past a year. We got married. No.
Is that right?
Yeah.
So you guys really are a team. But is it good to have him home with the children?
Yeah, we have a 2-year-old girl.
Yes.
Yeah, baby girl.
So
Yeah, she loves it, so she can spend more time with me, and I can spend more time with my wife and my daughter.
Yeah.
It's been a great blessing.
Yeah, I've got to believe it, because now you two are focused on getting, say, your next transaction, your next multifamily deal, you've had the blessing that you were able to quit your engineering job in the defense industry. You guys are working together as a team, and it's got to be great. I mean, I would think so.
Yeah.
That's good. Any funny stories that you can think of in the multifamily space that people could enjoy?
Well, I only indirectly related to multifamily. When you're doing deals like this, you're dealing with multi-million-dollar asset and million-dollar business. You're going to be doing a lot of things that you're uncomfortable with. So one of the things that Win and I could talk about is that we have to constantly, mind our mindset. So that so that we are constantly pushing our comfort zone, not to be too comfortable and not afraid to try new things. So we were actually at a Disney World, a couple months ago, and I kind of used that argument to convince my wife to ride this roller coaster, and she actually said yes.
Yeah.
So we rode this Himalaya roller coaster ride. It was pretty intense, but she made through it.
Scared.
And afterward, I asked her, wasn't it great to push outside your comfort zone? She said yes. So was it fun? She said
yes.
Yes.
Oh, good.
Would you like to do it again?
No.
One time it was enough. That's
Yes.
That's good. But maybe the moral of the story is that pushing yourself outside your comfort zone, that was something that you guys did. Not only were you able to do single families, be very successful with that. Now you're able to get in the multifamily space. Now you're buying hundreds of units, and that I would think that your future is to buy more units. I mean,
yes.
You tell me. I mean, what's 2016 look for you?
Obviously, we're looking to do more deals, but we're kind of looking for maybe partner with other people, to help other people to do their first deal. So this way I will leverage their time, because I think once I got 3 or 4 property as a sole sponsor, I'm going to be pretty busy asset managing it. So my goal is to team up with other people. If they find good deals, I can team up with them and help them to raise money, help them to bring Fannie Mae qualifying experience. So be a win-win for everybody.
Yeah. So just like we were talking about before, is that what Ken is looking to do and Win is they were helped with somebody that had multifamily experience in the past, just like that country club Fannie Mae example that we used. So Ken and Win are looking to do the same thing for somebody else. So if there's somebody that's out there that is looking for maybe another KP that has experience, has a good net worth, has good liquidity like these guys do, they'll help them. It's kind of like passing it forward.
Yes.
I mean, what a great thing that you can do to help people out. If the property does make sense and they may be lacking multifamily experience or ownership, you guys can kind of step in, provided that it's a good deal. I mean, you'll go through the numbers. You kind of help that sponsor group out and making sure that it does make sense for everybody before you'd sign it. So kind of looking backwards, if and this will probably be our last kind of question, is that what would be something that people, you and Win, would want you to understand today? So looking backwards, 3 or 4 years ago, are you happy you made the transition from being a W-2 employee to owning single family, then to multifamily? Was it a good move?
Yes, obviously. When we started it, I mean, that was the goal, is to be financially secure and have more free time for yourself, right? So obviously that's the goal. And as we were doing single family, we can see, we can actually see it's coming together. But obviously I have to stay employed, to get those loans. So that kind of pushed us into the multifamily side. And once we got 2 of these property, we were set. So I make the move to be full time. So yes.
Being not only a full time multifamily investor, but also a full time dad, staying home with Wind and keep an eye and really being a co-parent.
Yes, I enjoy that most actually.
So just looking back, maybe it was all worth it to make the effort to do the single family than to the multifamily side. So we understand that. Anything more that you guys want to add to the podcast?
Mm-hmm.
Yeah.
Okay. Well, guys, I can't thank you enough for coming in, saying hello to everybody in the podcast. And that if anybody wanted to get a hold of you guys and just kind of talk a little bit about SHOP and maybe just talk a little bit about your success, Wind and Ken, what's a good email address for you guys?
My email address is youproperly@gmail.com. Basically, it's my last name. It's property is PORPRTY @gmail.com.
So give it one more time. Again, give that email address one more time.
It's uproperty@gmail.com.
Fantastic. Wynn, thank you for coming in. Appreciate it.
Thank you, Paul.
Ken, thanks for coming in also. We appreciate it. And
Thank you, Paul.
And thanks for listening.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.